Welcome to the Real Estate Guys radio program. We're in Las Vegas, Nevada this week at Freedom Fest, the largest gathering of free minds in the world, or so claims Mark Skousen, the promoter. We're going to meet lots of those free minds this week on the Real Estate Guys radio program.
Hi, this is Patrick from Paradigm Life. I've recently written an ebook called The Perpetual Wealth Strategy. The ebook discusses one of the best investments, real estate, combined with a financial vehicle used by the wealthy, many U.S. presidents, famous actors, athletes, and even Houdini himself. You can download the ebook for free in the resources section on the Real Estate Guys radio homepage. Don't wait. Go download it now.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Home Buyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A-plus rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me as usual, co-host financial strategist Russell Gray.
Hey, Robert.
We're back in Las Vegas, Nevada.
Yes, we are. It's a ton of fun.
My goodness, so much going on, and particularly this event, Freedom Fest, our 7th year at Freedom Fest. And I'll tell you what this is. It's a meeting of all kinds of different people from different walks of life who have kind of one thing in common, and that is they're in pursuit of whatever liberty means to them.
Yeah, you know, if you really think about it, the essence of liberty is, or freedom, is private property, is the ability to have your private thoughts, your property, your intellectual property. It's the ability to own the means of your production, to be able to have a job or to be able to produce a living for yourself and not be dependent upon somebody else, to be independent. Property, of course, because if you can't have space, if you can't have some place to occupy, if you don't have the opportunity to own property, which often is the means of production, then you have no freedom. So freedom and real estate really go hand in hand. If you think about what the word real estate means, it's the king's land.
Right.
For those people who don't really understand any other world than the world that the United States of America gave the world through the Declaration of Independence and really the Great American Experiment, people didn't have the ability to own property. They were basically serfs, and they worked the land, and everything was owned by the king, and then they got a portion of their production, and the rest they sent to the king. Now, of course, back then, they got to keep 75% of their production and send 25% to the king. And I think a lot of people in today's tax system would go, that's a pretty good deal.
That's a good deal. I could argue it's different now. The point is different times now. And, of course, we have listeners in a lot of different countries and a lot of folks here from all over the world. And I think the interesting thing about this conference for us is it's not just about economics. So there's all kinds of investors and different opportunities for investment here. That's certainly a big part of it. There's a whole Shark Tank thing going on with Kevin Harrington here and our friend Greg Winter. There's all kinds of different businesses that help people invest passively. But beyond that, there's also a lot here in terms of health and metaphysics and economic policy and presidential candidates, one of which we'll meet today. And there's all kinds of different things you can come here to hear and to talk about.
Well, if you sit around and you read your own writings and you talk to yourself and listen to your own voice and just exist in the incestuousness of your own thought processes, rarely will a good idea come along and hit you on the side of the head.
Right.
The best way to stimulate your thinking is to get around other people, and really it's to get around other people who don't see things exactly the same way you do. You know, we do the annual Investor Summit at Sea, and for a number of years we were the primary content providers.
Yes.
We really drove that. And of course, it's no secret for people that have listened to the show for quite some time that we ran into a bit of a train wreck in 2008. And part of that process coming out of that was why did that happen to us? And it happened largely because we had one way of looking at things. We looked at everything through the real estate lens. We had a body of experience that was basically in 40 years that we were looking at the markets. It had never really gone down aggressively. There was that blip in 1989. Certainly there's some markets that had had some difficult times, but nothing like what we saw in 2008. That was largely unprecedented. And so you sit back and go, okay, well, who did see it and why did they see it? And that's where we really started to understand Austrian economics and the different schools of thought, if you will, Keynesian and the Chicago School. And we started seeking out writers, people like Peter Schiff, pontificators, if you will, of investment perspectives that we hadn't really contemplated. We started talking about all those things. Well, where we met a lot of those people, where we ran into a lot of those good ideas was the very first time we came to Freedom Fest. We didn't know what to think. We didn't know. We just knew Peter was going to be here. There was other people that looked really interesting. We just randomly said, hey, let's see if we get some really good interviews. The first guy who responded that first year, and I remember when the text came in from his office, we were sitting in the parking lot. We're just getting ready to pull in, to get our accommodations here in Las Vegas. And the text came in, and Steve Forbes' office had responded to our request for an interview. We couldn't believe it. Here we were just, a couple of radio guys and, doing a niche show about real estate investing. And billionaire Steve Forbes, presidential candidate Steve Forbes, editor-in-chief of Forbes magazine, responds to our text and says, yes, I'd like to be on your show. I was like, wow, that's
Remember
amazing.
Why that was? Because at the time, the Forbes podcast was not rated as high in the business category as the real estate guys.
And it's still not.
All right. Well, we never know what's going to happen. So before you know it, who knows? Maybe Steve Forbes will even show up today. But here's what I do know. You're going to have to open your mind a little bit, not only to come to an event like this, but even on this show, because many of the guests have a political agenda. The real estate guys are pretty agnostic. We don't necessarily have a political agenda of any kind. But if you had to put a label on this conference, you might call it libertarian. But there is every type of person here. There's every type of political bent here. There's great and healthy debates here. But as you listen to the interviews, I'm going to let them speak. I'm going to let them share what they came to talk about, and you make your own decisions. But happy to have you listening today as we come live from Freedom Fest in Las Vegas, Nevada.
Hello, this is Robert Kiyosaki. I'm the author of Rich Dad, Poor Dad. And if you're serious about learning how to invest in real estate, listen to the real estate guys. They really know what they're talking about.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. You never know who you're going to run into when you get out into the world. Let's meet our good friend. He was with us about 10 weeks ago. He's back. Peter Schiff, how are you?
I am good. I'm good. Good to be back in Las Vegas with the Real Estate Guys.
Always good to hang out, man. And you've done a couple things. You did your great talk yesterday, your keynote, but this morning you were on a panel about the future of the dollar, and it was fascinating stuff.
Yeah, the future's bleak, unfortunately, for the dollar, but you never know. Maybe we could do the right thing at some point after the crash. We can resurrect, the economy and the currency, but for now, I think the dollar has a rough time ahead.
Yeah, it's interesting that one of the questions came up about how long. You've given us the prognosis that the dollar is doomed, but it's been a while, and the dollar has been doomed all that time.
Well, the dollar has gone down. It's just gone down slowly, but it's gone down consistently over time. Certainly, it's gone down against other currencies, but it's gone down more just against the cost of living. Because all currencies are going down. So on a relative basis, it's harder to see how much value the dollar is losing if you're comparing it to another currency that's also losing purchasing power. But everybody can look back at the cost of living 10 or 20 years ago, and how many more dollars do you need now to buy the same quantity of goods and services? Look at the price of gold. Gold prices were below $300 an ounce in the year 2000, and now they're above $1,300 an ounce. So certainly you don't buy nearly as much gold for your dollar as you used to. And in fact, when we first decoupled the dollar from gold and went off the gold standard, you could buy an ounce of gold with $35.
Right.
Now you need $1,335 to buy the same ounce of gold. So that is a tremendous loss of purchasing power. But I think the lion's share of the losses are ahead. I think the next decade could see an even bigger loss of the dollar's value than the prior century.
Now, this year at the Investors Summit, you weren't able to join us because of your amazing daughter, who I got to meet just yesterday. What a beauty she is. Thank goodness she looks like her mom. But you came for the couple of days before, and we had our gold panel. And since then, your gold fund has been like the top producing gold fund, which is what you said would happen.
Yeah, I can't take credit for all that because Adrian Day is my sub-advisor, but I can take credit for hiring him.
Yes, you can.
Because I knew that he was a really good stock picker. And yes, our gold fund is beating all the other gold funds. In fact, it got written up in, I think it was a Barron's as the best fund. Even though the sector has done very well. You couldn't lose buying gold stocks this year. They're all up. but we still beat the average and beat all of our competitors. And I think that's going to continue because I think Adrian's doing a really good job of finding the smaller companies. I mean, anybody can just buy the major companies, right?
Sure.
I mean, you don't need Adrian for that. It's all the other companies that differentiate us from everybody else. It's some of these hidden gems, the real gold mines in the gold mine sector.
Yeah.
But the problem is when you try to venture into that territory, there's also a lot of, duds in there. There's a lot of fraud and, a lot of misinformation in the mining space. So you really have to know your stuff, and that's why I got Adrian, because he's been living this for 30 years, and he's been really down in the trenches, literally, and in finding the company's hidden value and understanding the whole industry. But I think this is still early. I mean, yes, gold stocks are up dramatically in the last 6 months, but if you keep that rise in perspective, if you look at a chart of where the stocks have come from, all they did is recover ground they never should have lost a couple of years ago. Gold stocks are still way below where they were in 2011 and 2012. In fact, they have to double from here to get back to there. But I don't even think that was the top. I think we're going much higher than that because I think we've printed a lot of money since 2011, and we're going to print a whole lot more. And with 0% interest rates and now negative interest rates, I mean, nobody had even heard of negative interest rates back in 2011, 2012. Now it's a reality. And so I think the environment for gold has never been this good. It is much better than it was back in 2011 when gold stocks were twice the current price. So I think there's a lot of upside, and so people should not be upset that they missed the run so far. Just get in on it because this party is just getting started.
There you go. Well, let's talk real estate a little bit. A lot of folks claim to have predicted the real estate crash of 2008, but you did so in writing in 2006 in your book Crash Proof. It's amazing that you called it as well as you did in many regards. I know you think everybody should have seen it coming. Where are we now? We're starting to approach bubble time again, aren't we, in real estate?
Well, we're in a bubble that just more than just real estate. I mean, it encompasses everything. It encompasses the bond market, the stock market, the dollar, and of course the bond market bubble is helping to prop up the real estate bubble because anything that is a function of interest rates is going to be affected by the bond bubble. Real estate investors, the most important aspect of that is going to be interest because most real estate is purchased with debt. And therefore, the interest rate is key. And also, when you value income-producing real estate, you have a cap rate. And so the lower the interest rates are, the higher the cash flows from real estate are worth. And so the entire market is being artificially propped up by cheap money. And so when the bond bubble goes, the real estate market, goes with it. And of course, even if you look at the residential aspect of it, it's not the same type of craziness that we had in 03, 04, 05 with the no-doc teaser loans and people putting nothing down and buying 4 or 5 houses and claiming they lived in every one of them.
Right.
Home ownership rates are now at a 50-year low, and most Americans are paying rent that is escalating, rapidly every year. But all the buying has been coming in from investors who have been using cheap money to buy up real estate, not mortgages the way a regular buyer would finance it, but they borrow money from other sources and then use it to buy real estate without a mortgage. And a lot of the buyers were foreign. A lot of Asian buyers were coming in, and now that's just starting to dry up. And I think a lot of that hot speculative money, the private equity funds that were involved in the real estate market, I think they're going to look to liquidate some of these residential properties. And I think that's where there could be some real opportunities for investors, because when these guys decide they want out, there's really no buyers there. Prices have to implode, and these guys don't even care because there's no bank. You don't have to get permission to do a short sale. If you paid all cash for a piece of property and now you don't want it anymore, or your hedge fund is getting redemptions and you have to sell, if you sell for 30 or 40 cents on the dollar, that's what you do.
Right.
Because these guys are used to blowing out with losses on a bad stock pick. So, I screwed up. I bought this single-family home. I thought I could rent it out. And maybe a lot of these guys who have no experience in real estate, they had no idea what it's like to be a landlord. You buy 100, 1,000 houses at a time, single-family homes, and you think, okay, we'll just manage these properties. Can you imagine all the maintenance problems they're going to have? Or it's not like having like an apartment where you have 10 or 20 units all in the same building, but you've got all these single-family homes, and then you got to take care of the maintenance and the lawn and all the different costs. So I think they bit off a lot more than they can chew. And when they sell them, they're probably going to take huge losses. But then some people will probably be able to come up and get some great buys.
Those people would be our listeners, yes.
Yeah.
So exactly right. All right, good stuff, my friend. Well, we're looking forward to next year's Investor Summit. You're going to come back with us.
We are. We'll probably bring Lillian, who's a little girl, and my son Preston might come, and he looks like me, and he's still cute. So it's not all Lauren.
That's right. It's so true.
We'll probably be there with the little ones, and so looking forward to it.
All right, man.
Got to get another Pepper.
Yep, there you go. All right, Peter Schiff, always great to pick your brain. Thanks for being on the program.
All right, my pleasure.
You're tuned to the Real Estate Guys radio program live in Las Vegas, Nevada. More when we come back. I'm your host, Robert Helms.
Live nationwide. You're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Robert Kiyosaki says every entrepreneur must be good at sales. It's true for investors too. Sales is how you attract money, people, and opportunities. Sales is the skill used to negotiate deals and lead your team. Sales skills are essential to success. The good news is, it's a learnable skill. The great news is, we've created a 2-day interactive workshop to teach those skills to you. Make plans today to attend How to Win Funds and Influence People, Mastering the Art of Financial Selling. For dates and details, send an email to sales@realestateguysradio.com or visit realestateguysradio.com and look under events. Gain the skills you need to succeed. Email sales@realestateguysradio.com or look under the events tab at realestateguysradio.com.
Hi, this is Anthony Melchiori from Hotel Impossible, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. As you know, we love real estate, but before you're a real estate investor, you're an investor. You got to look at a lot of different asset classes. The gentleman you're about to meet has been on our show many, many years ago, and it was time we reconnected. Let's say hello to Adrian Day. How are you, sir?
Well, I'm fine, thank you, and thank you for having me back.
Yes, it's good to see you. And let's talk about the metals, because you're managing a gold fund, and not only is it doing well, but the metals are doing great this year.
They're doing extremely well, and there's a lot of obvious reasons for that. I mean, first of all, we've had a long bear market, and so there's a lot of people who are, should we say, interested in gold but not invested in gold.
Right.
Because they didn't see any urgency or any rush, and the truth is they were right.
Yeah.
And so now the gold started to move, we're seeing people jump on board, and that's why we haven't had any significant correction in this market this year. Normally in the spring, we get a pretty significant pullback in gold. We haven't had it this year. Every single pullback in gold this year has been very shallow and very brief. And the reason is there's just so many people on the sidelines, retail and institutional. It's the same thing for both. And everybody has a different threshold. You know, some people gave in June. Well, it isn't coming back. I'm going to invest now. I had an investor the other day who said he's still waiting for $1,000, then he'll invest. I said, well, good luck. You'll be waiting a long time. I guarantee you before this bull market is over, and we haven't seen 1,000, I guarantee you that person will invest.
Right.
I just can't tell you when he's jumping in.
Right.
So there's a lot of money on the sidelines. That's one thing. But, of course, why is gold going up? Well, we've got these ultra-low interest rates, as we've talked about at this show. I'm sure you've talked about it a lot because it affects real estate. These excessively low interest rates in the U.S. and around the world. And it's very clear, you know, in December the Federal Reserve raised interest rates, and the Federal Reserve itself, the committee that sets interest rates, actually predicted 4 interest rate hikes this year.
Right.
How wrong can you be? And it's clear that interest rates are going to stay excessively low the longer than anyone is thinking at the moment. So that's very, very positive for gold. And then, of course, you've had the Brexit vote and the uncertainty about Europe. You know, in a poll, a majority of Italians would vote to leave if they had a vote. But also you've got a strong movement in France, you've got a strong, anti-EU movement in France, a strong anti-EU movement in Holland. So that produces a lot of uncertainty, and gold feeds on uncertainty. So I think everywhere, and that's forgetting the geopolitical risk that we've got. So frankly, everywhere you look, the macro fundamentals are very, very bullish for gold.
Well, a lot of folks have been talking about gold and being in a position to see the bull side of the market for quite some time, and yet you still have people like, well, it's we're going to buy on the dip, it's going to come back down. What's your long-term prognosis for gold?
You mean price?
In price, yeah.
I'm not going to avoid the question. I will answer it. But I'll often give a prediction on a price of a stock or of the stock market or this. The thing with gold, what is the price of gold? The price of gold is the inverse of the dollar.
Right.
So if you tell me what the dollar's going to do, I'll tell you what gold's going to be.
Exactly.
So the truth is, let's say over 5 years, gold could be anything. Gold could be $10,000 an ounce or $20,000 an ounce if the dollar goes down sufficiently.
Yep.
Now, that's not what I'm predicting. I need to. So what am I looking for? I mean, I think this year we're definitely going to go above 1,400. We're going to do that pretty soon, I think. Pretty soon. So by the end of the year, I would look for a price that's somewhere between $1,400 and $1,500. I don't know where, but to a lot of my gold bug friends, that doesn't sound like much. Oh, you're too conservative, they keep telling me, Adrian. But, if gold goes above 1,400, the gold stocks are going to go up 20, 30, 40% from here.
Right.
Meaningfully. So, 1,400 will make me, something over 1,400 will make me happy. But in the next year or two, we're definitely going to exceed those old highs, I think, of 1,900.
Well, and let's talk about this. We've talked about this in the show a few times. Lots of different ways to invest in gold. It's not all physical metal. And so you run a fund, and you don't just buy physical metal. Talk about how your fund works.
The fund is primarily gold stocks, like most of the gold funds, is primarily gold stocks. We do have some bullion, just as all of the funds do, but primarily gold stocks. The gold stocks, of course, give you the leverage to gold.
Yep.
So other things being equal, gold goes up 1%, the gold stocks will go up, 2% and so on. Now, our fund is a little different, or where do we distinguish ourselves, I should say, from other funds? We tend to have more exploration stocks than a lot of funds, and we have some very, very small exploration stocks in our fund as well. They don't represent a huge amount of a fund, but, maybe together, stocks under 100 million market cap represent about 10% of a fund.
Yep.
But those are the stocks that can give you the 10 and 20 and 30 to 1 returns if they make discoveries.
Right.
So we focus on that end of the market. And in that end of the market, due diligence, selection, buying A and avoiding B is absolutely critical. I mean, the truth is that if gold goes to 1,800, it doesn't matter which of the seniors you invest in, they'll all go up. Some will go up a lot more than others,
sure,
but they'll all go up. With the juniors, that's not the case at all. You can have a stock that collapses even when the price of gold's going up. So selection is critical. Getting to know management, I think, is very, very important.
Absolutely. Well, we sure appreciate your time today, and always good to pick your brain. Thanks for coming back.
Well, thank you very much.
We're in Las Vegas, Nevada at Freedom Fest, an event we attend quite regularly because you never know who you're going to run into, and we're happy to introduce you to a gentleman who knows so much about resources and mining and the like. He's going to blow you away. Please say hello to Amiran Katusa. How are you?
Excellent. Thanks for having me.
Hey, absolutely. So, my goodness, so much has changed in the last year, and everything's happening, and all of a sudden gold's on the rise. And tell us what's going on from your perspective.
Look, in a global macro environment where negative interest rates, take Europe, for example, 1/3 of the euro has negative interest rates.
Right.
The other 1/3 is complete basket case, and then the other third doesn't even know if it's going to be in the euro any longer. So there's a lot of confusion, there's a lot of uncertainty. We're in a very volatile market here, and with Brexit happening, that really woke people up that, wait a second, the status quo is no more. And gold responded to that way, but you look at global currencies in a negative interest rate market, how do you protect your wealth? You guys are seeing that in real estate, where in certain regions, could you possibly have negative cap rates? As crazy as that sounds.
Isn't that crazy?
And that's the effect of where we are in the global market. So if you're a real estate guy and you're going, wait a second, negative cap rates make no sense, why would it make sense in the economy?
Right.
But that's where we're at. So if you have money, and I've been reached by some of the biggest family offices and fund managers, because I'm a resource guy, I've been involved in building some of the biggest mines in North America, financing them. We are in a market where people don't know where to put their money for safety. And gold is a great place to put some of your assets for that protection to the currency devaluation. For example, look what happened to the British pound right after Brexit.
Yep.
That was the biggest drop it's ever had in one day.
Yeah.
But in gold terms, you would be up 25% if you protected yourself in gold.
Yep.
The Russians went through that with the ruble right after oil fell apart. Look at Venezuela. You look at Brazil. Just 3 years ago, it was $1 to 2 reals. Now it's 1 to 3.5.
Right.
That's a huge depreciation. So if you have a savings account, your dollars now are worth so much less. That's why I'm very bullish on gold.
Well, and let's talk about the variety of gold, because it's not just, holding the metal physically. You really focus on the kind of the front end of it.
You got to be very careful where you put your physical gold. If you take 10 million ounces of gold, well, what is that physically? Well, it'd probably fit within this booth.
Right.
So you got to be careful where you put gold. Do not put it in a bank vault, because if the vaults get seized by the government or whatever, then do you put it in your basement? Well, if you're going to hide it, make sure you don't show it to your buddies and show off about it. This is something you got to be very careful. So how I think you get the maximum leverage for gold, you can buy gold producing companies if you're lower risk. You got development companies. There's ETFs that you can buy to have exposure to that gold. But the ultimate leverage, Doug Casey's a famous name. He's my partner in my fund. He's a big guest here at the Freedom Fest.
He's been on our show a few times.
How he's made hundreds of millions of dollars is not buying and holding physical gold. It's actually exposing yourself to the explosive leverage of these juniors that actually find the gold that the majors want to buy out and then develop and produce. That's where you get your maximum leverage.
And this is really what you spend your time researching. The companies, the regions. How did you get started in that?
Well, I started out as actually a high school math teacher. And then from there, I moved my way up, and I started teaching calculus at the university. And then I kind of, at a very young age, realized that I wanted more. And at the age of 23, I got into tungsten, then I got into uranium, and then at that point, back in 2004, I started running into Doug Casey and Rick Rule, and I started writing larger checks. I had some good success early on in my career, and it just kind of like serendipity took over. And 2006, I became the major investor in what today is Canada's third largest producing copper mine.
Yeah.
So it sounds like it was easy, but it took 13, 14 years of major sacrifice, traveling to over 100 countries, being on the road for over 300 days a year for 10 years. But it comes down to, if someone says, give me the Coles Notes version, invest in the right people at the right time and the best assets, and be very careful where you put your money.
Yeah, such a good point. And it's more of a global economy today in a lot of ways, right? People that are dollar-centric, there's a bigger picture than that. How does that relate to what you guys do? How much of it is internationally based, maybe outside of the dollar even?
Huge. For example, let's take coal. Coal not only has the environmental aspects working against it, it had the success of the fracking sector working against it because natural gas became much cheaper.
Yep.
Then you have the government stimulus is going on and the push of green energy. So in 2011, wherever I was telling people, it's in national television and radio, just pull up my name and Google my comments on coal. Since 2011, I said stay away from coal. And
Yep.
the coal industry went down 50%, and people will say, well, now it's the time to buy. And I debated a very famous person at the New Orleans show that you mentioned
Sure,
in 2014, and I said, no, coal's the last place you want to be, because just because it's down 50%, it's going to go down
Further.
much, much more. Then it went down 90%. And people are like, well, Marin, surely it's a place to be now. And I still say, no, it's not. I stay away from thermal coal. I have zero coal investments. That's an example. Then you look at China, who consumes over 50% of the produced coal globally. They've started changing the rules on coal. You can take oil as a major example of how the global markets will affect you. With Iran, the sanctions being lifted on Iran, that is a huge game changer in the global markets. You look at, will the success of fracking change the game? Definitely. Russia cutting a deal with China. There's so many factors that can go. And then at the same time, what about someone like Saudi Arabia, Saudi Aramco, which is the world's largest producer of oil from one deposit? One project produces about 5 million barrels a day. Saudi Aramco produces about 10 to 11 million barrels, and they can produce up to 13, 14 as a swing producer. So if the Strait of Hormuz shuts down overnight, you'll see a double in the price of oil. So the market is so much more interconnected that if you're speculating in commodities, be very careful to understand what's going on. And also, you take uranium as another great example. What happened with Fukushima turned the uranium market upside down, and then you look at the major producers of uranium, for example, Kazakhstan, they produce 40% of the global primary uranium production, and then they've depreciated their currency so much that the North Americans can't compete. So you're seeing all these different factors. So not only is it supply demand, but what about the currency factors that play into effect? Even in North America, there's oil producers in Canada, because they have the effect of the weaker Canadian dollar, are competitive to some of the best producers in the Eagle Ford or the Bakken. So there's all these factors that you have to evaluate.
Well, yeah, and now that a lot of these countries are settling within each other instead of
and
the
non-US
petrodollar, right?
dollars.
Exactly, that's a big change.
I have a whole chapter about that in my book where I go be very, very careful.
I was going to say, let's talk about your book. Was it last year the book came out?
No, it was in the late 2014.
All right, so I remember we were at the New Orleans conference right about the time it was coming out.
That's right.
Tell us about the book.
It's called The Colder War. It cracked the New York Times bestseller list, and I think it was in mid-November 2014. It's essentially, through all my travels, exactly what you brought up, how the emerging markets will affect the established status quo. So how does Putin, his agenda with Russia, affect oil and uranium and natural gas? For example, a lot of people don't realize that a little over a quarter of all of Europe's consumed natural gas comes from Russia. Well, that's a serious political leverage that the Russians have. And how the emerging markets, someone like Putin and Russia working together with China, building a major pipeline, how's that going to change the dynamics? And where someone like Obama has moved the country backwards on a global standpoint when it comes to dealing with the emerging markets. For example, look at the Middle East. I don't think anyone's going to argue it's more screwed up today than it's been ever in the past. And are we closer to a solution? No. When it first broke out during my book tour, people are like, wow, surely there's going to be a near-term resolution. I said, no. Look what's going on in the Ukraine. Look what's going on in, Syria. Unfortunately, I see this madness to continue. And if you invest in the right places, it's almost like crisis investing. You can make a fortune if you bet right and sit tight.
Yeah, good stuff. All right, well, we could go on for a ton, but we appreciate your time today. If someone's interested in the research that you do, what's the best way for them to get a hold of you?
Just go to our website, katusaresearch.com, and there's a ton of material there. You can sign up and educate yourself.
All right, good stuff. We sure appreciate your time today. Great having you on the program.
Always a pleasure.
You're tuned to the Real Estate Guys radio program. More when we come back. I'm Robert Helms from Freedom Fest in Las Vegas.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Are you ready to profit in paradise? Hi, it's Robert Helms, and if you think real estate investing means tenants, toilets, and termites, think again. Located just a short plane ride from the U.S., a virtually untouched paradise awaits, the beautiful country of Belize. When you go to Belize with the Real Estate Guys, you'll spend 4 fabulous days discovering one of the most intriguing real estate markets I've ever seen. With its jungle rainforests, pristine beaches, and 81-degree turquoise water, Belize is one of the most beautiful places on earth. Plus, it's considered one of the top 7 tax havens in the world. Belize property property is on the rise, and many experts think the best is yet to come. But don't just take my word for it. Come experience Belize firsthand at our upcoming investor field trip. When you join us, you'll discover the many reasons we love Belize, like tremendously undervalued beachfront land, super low taxes, ease of doing business, and so much more. Get the details at realestateguysradio.com. Just click on events. See paradise for yourself. Click events at realestateguysradio.com, and I'll see you in beautiful Belize.
Hi, this is Darren Hardy, author of The Compound Effect, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. We're in Las Vegas, Nevada at Freedom Fest, where we love to learn about all kinds of stuff. And in fact, we have found a new type of real estate investment. I know you think it's all been done before. After 20 years, we'd run out of things to say, but no, we've got something brand new. And first, let me introduce you to Louis O'Connor from Latham Prime. How are you, Louis?
Very well, thank you. Very well. Good to be here.
Good to have you on the show. And what you guys do is agricultural real estate, but it's kind of a crop I certainly haven't thought before, but one I knew of, it's aloe vera. Tell us about what you guys do with aloe.
Oh, I will indeed, yeah. You're taking a bit of a risk asking an Irishman a direct question. It's very hard to get a straight answer from an Irish person, but I'll do my best.
All right, excellent.
I'll be economical with the words. Basically, what we do is we offer the investor an opportunity to purchase productive farmland in Colombia. The crop is aloe vera, and they can share in the profits with us at the end after it's planted. The purchase price includes the cost of the land, the implementation of the project, and the labour cost and farm management until the harvest comes in.
You know, a lot of folks who might listen to the show are interested in agricultural real estate, but it seems like it's so hard to play. And yet here, this is an individual investment. We'll talk about how you're able to do all that. But it always comes down to, in agriculture, what's the demand for the product and can you deliver it profitably? So how did you pick aloe vera?
Okay, well, I have worked previously with other projects where I live in Panama. We have offices in Panama and Colombia. So we've had some experience over the last 10 or 11 years of seeing what works and what doesn't. And it really boils down to the local partner. I'm Irish. I don't even know much about growing potatoes, never mind growing aloe. However, it'll begin and end with the local partner, and I won't go into too much detail now, but the family we're working with are a footprint in Colombia for the last 40 years, well educated, experienced working with the people, and they had already implemented by the time we invited in investors, and I think that's about probably the key thing is, will they or will they not implement? And they had already implemented. So
right, these plants are already growing, already out of the ground. It grows pretty quickly. So compared to other types of agricultural investment, what about the demand? I guess I'm trying to get my mind around. I see aloe vera in skin. It's good for your skin and so forth. But what's the outcome product that you guys are after?
Exactly. Aloe has been known for its medicinal benefits for centuries. I mean, going back to Egyptian times, and the gel is one thing. You'll get the gel comes out of the leaf, and that gel is 99% water, but the other remaining 1% is very, very powerful. And 45% of the demand for that, we will convert it to the gel to an organic powder.
Okay. The
demand for that is 45% from the cosmetics industry. Also now you'll find it in a lot of beverages. In fact, 10 days ago, Coca-Cola invested in a company called LA Aloe, and they make strictly aloe beverages, and Coca-Cola now have an equity share. We keep an eye on the market, and just recently there was an article in, I think, The Guardian in the UK. They're saying aloe, the next coconut water. So I think you'll be hearing more and more of it.
So investment-wise, you're actually buying real estate. You're owning a piece of real estate that is part of a productive farm, and all of that work is handled by your management. And in this case, the family you've talked about has been in the business a long, long time. So it's completely passive. You don't have to go plant the plants. You don't have to go there every year. It's a passive investment. Is that right?
Correct. Yeah, we're calling it farm in a box. So it's hands off, turnkey. Your investment includes all the management up till the first harvest, and then after that, the farm management fee comes out of the gross every year. So you can just come down and you can plant some aloe if you like, but come down and collect your money, or have it sent anywhere in the world.
And so how much time does it take for it to grow, and then how often do you harvest it?
When somebody invests, the farm management agreement allows for them 6 months to implement a project. So your plants will be in the ground within 6 months, and you'll receive title for the land.
Yep.
It then takes about 18 months for the plant to produce 4 pencas, 4 big leaves, and then it'll actually produce 3 to 4 times a year. The optimum level for growing this to get the best production and the bigger leaves is somewhere between 500 meters and 1,000 meters above sea level. The area where we are, Fusagasugá in Colombia, it's known as the Garden City of Colombia. It ranges in altitude, but it's about an hour and a half southwest of Bogota, and it's in the foothills of the Andes, so it's perfect for growing. You've full production in year 2 with income coming in, paid in year 3. And it keeps going on from there.
So you pay annually, but it actually gets harvested more than once a year?
Yes, just for accountancy and taxes. There are taxes in Colombia, and we factored them into our projected return. As a non-resident or a foreigner, you're entitled to buy land or operate a business in Colombia, but they just have a flat tax of 33% if you're a non-resident.
Okay. And now, what's the minimum investment for productive farmland in Colombia?
The entry level is $38,000 for 1 hectare, which is 2.47 acres of land.
All right. Well, that's certainly within the reach of lots of folks, and it sounds exciting. I know there's a ton about it in terms of projections and all that, but Louis got a great little brochure we're happy to send out to folks. And if you're driving or working out, all you need to do is send an email to allo, A-L-O-E, allo, at realestateguysradio.com, and they'll learn a lot about it. They'll see some pictures, and they'll find out what you guys are doing.
That's it. We look forward to hearing from you.
All right. Thanks, Louis. Thanks for your time today, and good luck to you.
Thank you very much indeed.
You're tuned to the Real Estate Guys radio program. We're in Las Vegas, Nevada for our annual Trek to Freedom Fest. The man you're about to meet also comes every year, and it's a pleasure to welcome back to our show Mr. Steve Forbes. How are you?
Doing great, thank you. Good to be back.
Always good to see you here at Freedom Fest.
Well, it's a nice place to come when the world is unraveling, that people who believe in freedom and free markets.
Oh my gosh, there's so much going on. It's crazy. How do you keep up with it all, Steve?
You just you do it. And the nice thing about the information age is that it's very, very accessible. And it's not just the instant stuff, it's research. I'm old enough to remember things called card catalogs and libraries.
Oh, my goodness, yes.
And now you got search engines to do a lot of that. So,
well, my goodness, most people would read your family's stuff in the physical magazine, and today I would imagine online is how everybody accesses everything.
Well, our paid circulation and readership is the highest it's ever been for the magazine.
Yep.
But the revenue, most of the revenue is coming from our website. We have over 60 million unique visitors a month, and we have over 1,800 contracted contributors. So we do over 100,000 posts a year. So virtually we produce a magazine every day.
My goodness. It's amazing how technology changes. Good stuff.
Yes, it does.
Well, so many things we could talk about, but you have a new book out called Reviving America. Tell us about that.
Well, we focus on 3 big reforms to get this economy moving again. There's a lot of chatter about new normal, which is really the new abnormal. There's no reason why we should be in the rut we're in. So a lot of things have to be done, but we have 3 priorities. One is repealing Obamacare and getting patient control of health care.
Okay.
Reforms such as nationwide shopping for health insurance, hospitals posting prices. I had to cite one example of a fellow who had a particular kind of stress test for his heart. He asked the cardiologist what it cost. The guy didn't know, so this guy, entrepreneur, went out and got prices from 20 hospitals and clinics in the region. Prices range for the same test between $1,100 and $6,300.
Wow.
So get transparency. How about infection rates at hospitals? People should know that before they go through those doors. So good reforms there. Second big one, of course, is the tax code. I want to throw it out and have a simple flat tax where just with a few keystrokes or a single page you can file your return. Generous exemptions for adults and for kids. Family of 4, for example, no federal tax, income tax, on your first $52,800 of salary, only 17% above that. The third big reform is stable value for the dollar. The Federal Reserve is trying to control this economy Soviet style by manipulating interest rates and money. Money should have a fixed value, just as you have 60 minutes in an hour or 12 inches in a foot. We did it for 180 years. It works, having stable value for the dollar. Investing is risky enough, but if you don't know if you're going to get paid back, what you're going to get paid back in is going to be a 100-cent dollar, 10-cent dollar, $1.20. You get less productive investment. So very straightforward reforms, and we think that people are armed with this information. They'll be able to put pressure on the politics to finally get some things done right.
Well, it's so simple, right? Because what we have is complexity, and government gets more and more and more complex. But in 4 minutes, you were just able to articulate 3 simple things, any one of which is going to have a profound effect.
Well, you take health care, which is now seen as a hopeless financial liability. These basic reforms have turned it into the most dynamic growth industry ever because health care is personal. And the proof of where the patient is today in health care is the fact that the crummiest motel in America wouldn't dare put you in a room with another guest with a curtain in between,
right,
as they do in hospitals. So basic reforms and turn liabilities into assets.
Yeah, absolutely. So, and you've been talking about the tax reform for a while, and there's lots of different ways to do it. But this way that you've proposed sounds very simple. It's going to eliminate tons of hours of people's time.
Well, and hours of time, resources, even the software you buy that you think is going to help you, like TurboCharge, you get, depending on your circumstance, you'll get different calculations of your liability depending on the software you use. Even these things, which we treat as gods, they must have the answer in there somewhere.
Right.
Can't comprehend the code. It's so complex and muddled and just not straightforward.
Yeah.
And imagine if those resources had been used for productive things like inventing new medical devices.
Right, exactly. So much to think about. All right, the book is called Reviving America at all your favorite booksellers. Mr. Forbes, it's always a pleasure to have you in the program. Thanks for coming back.
Love being with you, and I hope next year we have real freedom to celebrate.
Excellent. You're tuned to the Real Estate Guys radio program from Freedom Fest in Las Vegas, Nevada. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hi, this is Garrett Sutton, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate and Start Your Own Corporation. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate, paper, and bullion holdings with the right mix of LLCs and corporations. Our firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention the Real Estate Guys for a free bonus. That's 800-600-1760 or corporatedirect.com. We look forward to assisting you at corporatedirect.com.
Hi, this is Mauricio Raul, the founder and CEO of Mir Law Group, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, the number one downloaded podcast on real estate investing, and still on the radio after these 20 years. It's not every day you get to meet a candidate for President of the United States. This gentleman's been on our show more than once, though. Please welcome back to the show the amazing Gary Johnson. How are you, sir?
Oh, great. Thanks. Freedom Fest.
Freedom Fest. How about that?
Good deal, right?
Always good, right? A lot of free-thinking folks around here.
Free-thinking folks, a lot of entrepreneurs, equal opportunity folks.
Yeah, absolutely. Well, it's great to have you back. You're at this event quite often, in fact, and we've had a chance to visit. So, boy, interesting times. Here we are, right on the precipice of the election. What is it that America needs, Gary?
Well, interesting times, and by interesting times, I might be the next president of the United States.
How about that?
Driving a big old truck right down the middle of a 6-lane highway between Clinton and Trump.
Isn't that something, right?
Well,
who'd have guessed? And a lot of people have been hoping for that.
Well, and representative of what most people think, which is most people are fiscally conservative. Most people, really, when it comes to individual freedom and liberty, everybody supports that. that. Look, be able to make choices in your own life as long as those choices don't adversely affect others. Free markets, that's how we're going to rule the world. We're not going to rule the world by putting boots on the ground, dropping bombs, flying drones that are killing thousands of innocent people that have had the unintended consequence of making the world less safe, not more safe. And make no mistake, if we're attacked, we're going to attack back. But look, what we're doing isn't working.
And when people pay attention to the news about the economy and they hear there's more jobs and everything's rosy, when you dig beneath it, as we know, that's not the case. This is going to be an amazing next 4 years. And if you get in there, what are you going to do?
I'm hoping to get elected President of the United States. And as President of the United States, count on me to sign any legislation that simplifies our tax code. Count on me to sign any legislation that reduces taxes. I'm not going to get elected king or dictator, but if I could wave a magic wand, I would eliminate income tax, I would eliminate corporate tax, I would abolish the IRS, and I would replace all of that with one federal consumption tax. I ask people to look at the fair tax as a way to dot the I's and cross the T's on how you would accomplish that.
Yeah, there's a lot of talk here at Freedom Fest, certainly about tax reform, and lots of people have different ideas, but you've always been a guy that's been opening to hearing other ideas, and here we are now at a crazy, crazy time in our nation's history, but you served before. A lot of the listeners might not realize that you were the governor of New Mexico, and a very popular governor on both sides of the aisle.
And Robert, my running mate, Bill Weld, former two-term Massachusetts governor, both of us Republicans serving in heavily Democratic states. What is that? Well, that's being fiscally conservative, and both of us, I think, were over the top when it came to being fiscally conservative. And then both of us, I think, were over the top, recognizing individual freedom and liberties.
There seems to be a lot of polarization of the parties and, having a strong candidate for the Libertarian Party. But not only that, someone that's been in office, someone that's been there. I mean, it's almost like it's that the time has come.
I do believe that. I believe most people in this country are libertarian. It's just that they don't recognize it. And given the polarity of the two major candidates, that opportunity right now is presenting itself.
So what's it like? You're out there on the campaign trail, you're meeting people, you're talking to them, you've got your ear to the street. What are the concerns people have today?
Well, it's the concerns that we all have, that government, really, most people want smaller government. Most people recognize that big government means solutions to issues that cost money. And to pay for that, it comes out of your and my pocket, and that's taking away from our own individual liberty and freedom to spend that money as we see fit. And then most people support everyone making their own choices in their own lives. I mean, this is reflective of most Americans, and I think Democrats have lost their way. They can't balance a checkbook. And Republicans, if they're going to continue to try and force a social agenda on other people, they're going to continue to lose support in that category also. Look, Republicans need to cut government spending, but they can't pick and choose. They can't cut Planned Parenthood and then add spending to the military.
Right. Good point. So many things to juggle, and you're a busy man. We sure appreciate your time today, and thanks for...
Thank you. Good luck to you.
There's Gary Johnson. We're in Las Vegas, Nevada this week. It's Freedom Fest, and always just a great time. Amazing people today on the program.
Yeah, it's a ton of fun. Not only do you get to talk to these thought leaders and these industry executives and these people that look at the world and all the components of the world from very different perspectives. It's one of the things I love about the summit also. It's this idea that you spend time talking to thought leaders who are looking at things from different perspectives. But then on the summit, you get to hang out with other people who are processing what I call great thought processors, who are processing the very same thing you just heard, but maybe a little bit differently, and you have those conversations. So one of the things that have been fabulous about being here in Las Vegas at the Freedom Fest this year is how many of our listeners have actually stopped by and said hello to us.
Oh my gosh, dozens. This is great. We had Mark Skousen, who's been writing his newsletter for 30 years, economist, on the show several weeks back, talking about Freedom Fest, and lots of the listeners said that sounds fun and showed up. So if you came out and saw us here at Freedom Fest, awesome. If you missed it, well, we're going to be somewhere else soon.
We are. So coming up at the end of October, and it's on our website under events, is the New Orleans Investment Conference. In fact, many of the people here at Freedom Fest that we're talking to that came here largely for an investment experience, we said, hey, you ought to check out the New Orleans Investment Investment Conference. And many of the same people that we see here, we also see at that conference. They come for
Mark
different
Skousen,
reasons.
who promotes this and develops this conference, has been speaking at the New Orleans Investment Conference for more than 30 years.
Yeah. So it's fun. We're going to be speaking at the New Orleans Investment Conference also, so that's exciting. So come on out and say hi to us there.
It is the longest-running investment conference in the U.S. This will be the 43rd year, I believe. All the details on our website at realestateguysradio.com. I think our message here about Freedom Fest is that you got to step back and look at bigger picture economics. You can't just go get so inbred in your thinking that it's all about real estate. I mean, we're the real estate guys, and here we are at a conference where there's not that much real estate. You heard about some of it on the program, but there's big ideas, and there's a lot more to come. So big thanks to Mark Skousen and his team for accommodating us this week and all the great guests today. Next week on The Real Estate Guys, we've got an awesome guest. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.